Hello, my name is Fan Yang, your technical analyst here at CMS Forex. It is Wednesday, November 25th, 2009, and you're watching today's video technical update. The market was bullish on the euro to start the week. Let's take a look at the euro dollar and the euro pound pair to check out other scenarios since our short-term bearish outlooks are being invalidated. Also, we'll take a look at the Aussie dollar. This video is being prepared at about 5:30 p.m. Eastern ahead of the Asian session. So our first pair is the euro dollar pair. We were here yesterday as the market was showing some signs of reversal, and it was at an important power line. So we picked up on this and anticipated the decline to test our 1.48 area, but doesn't always have to, and in this case the Asian session brought the pair down to between to the middle of this range basically, and then in the Euro session, in the European session, the market rallied, and in the US session it surged and broke our previous resistance. So these resistance lines are all broken, and now we have to consider the bullish outlook, which is actually in line with our longer term trend, as we see here. We were looking at a shorter term consolidation, but now when we look at the breakout, we see that it's in line with our very healthy uptrend, which has been intact since March, or since May for that matter. Okay, so now we have our projection for the swing, and it would be to the 1.5020, a little bit above 1.5020. Now looking back at the 4-hour time frame, you see that it's already at 1.5130. So that's there might be 100 more pips to go before some major resistance. But even at the moment, we see overbought conditions. So if we were to approach this and to give ourselves better reward to risk ratio, we would have to wait for a little minor correction before considering the long position. Alright, so that's the euro dollar, and we'll move on to the euro pound. Our next pair is the euro pound pair. Now we were looking at this pair as it was ranging for this week. It had a clear out, and then it came back in. So this clear out actually reflects the strength of the market. You see that there was a reversal candlestick combination here, but the main part is that the market was not able to sustain this breakout. It was not able to sustain a decline. Basically, it completed 2 waves down. Here's one, and then here's another one, and then the market rallied. So it's back into the range. Now that it's back into the range, there's at the moment there's not any reason to believe that it's going to break our resistance. But if it does, then we basically invalidate any short-term bearish outlook. At the moment, we still could have our short-term bearish outlook. Here yesterday, these candlesticks, this topping action with this breakdown was one of the signals. However, it did not break below this previous high here at 0.8980. And the market rejected it and continued to rally. So now this price action here, it doesn't completely invalidate the short-term bearish outlook back to here, but if it does break above 0.9060, up here, it will, or rather, what 0.9070. So if it does break above this resistance, we have to reassess our outlook. And now we're looking at our daily. We have a possible Elliott wave count here, starting here at the basing action. Okay, that would be our first wave, second wave, and then our third wave, which is also broken up into 3 major waves, and also our fourth wave and our second wave are very different, and that's one of the guidelines for the Elliott wave count. And now we are possibly in our terminal fifth wave. Now this fifth wave could be could stop here at 0.94, or it could continue further. In any case, the confirmation we need for this is the break of our resistance here at 90.50, but we need some significant break, not just a clear out break such as this. So we'll see if the market continues, and if it does, we'll plan for, just like the euro dollar, we'll look for a kickback, and if that kickback holds, that's actually specifically a throwback. If this throwback holds here at 0.9050, then we would expect the market to continue to rally. See, in this case, we had a breakdown, right? But this trigger was a very aggressive trigger if you were getting on it, because the market is oversold. So what we normally want to do is wait for a kickback. In this case, it's called a pullback. Up here, this type would be a throwback. So this pullback, instead of holding here, continued, which invalidated this signal here. So here, for the same reason, if we do see a breakout, we want to wait for a retest of this former resistance as support. Then we have more confirmation, and more likely than not, our momentum indicator will show better timing. So here we're already almost at overbought, so we would expect some throwback even after the break. However, it's also likely that our short-term outlook is not invalidated, and the market can still bring the pair back down. So here we have two scenarios, which is to hold our bearish outlook. Another one is to anticipate this break, and if it does, we have to invalidate our bearish outlook and go with the bullish outlook, but we have to stalk this breakout for this correction. Alright, so that's it for the euro pound. Finally, I want to take a look at the Aussie dollar. Now, as we see in this daily chart, much like the euro dollar, the pair has been in an inviolate uptrend. This trend line has stayed intact, and here we got a retest here, and let me zoom in a little bit. So we had this rally, came down to the 61.8%, which is also 0.91, and the market rallied. Now, looking into a shorter time frame, so that we can time this consideration, bullish consideration, we look at the 4-hour time frame, and we see that a Gartley is about to be completed. We see here, we saw almost a head and shoulder pattern, then we see a decline, and now we have a Gartley. This is a bearish Gartley, so we expect some resistance here at 0.9350, which is also 78.6% of this decline, or the retracement of this decline, and also 150% extension or expanded retracement of this decline here. So this is important resistance, and very aggressive traders may look to consider the bearish outlook here. But for a more conservative outlook, to go with our daily trend, since it is still an uptrend, we would look for some bottoming action here at this important trend line, where we would consider our bullish outlook. And again, we consider the bullish outlook, but because our stochastic is showing us overbought conditions, we would expect some kind of retracement first before continuation. Alright, so that's it for the Aussie dollar. So that wraps it up for today. My name is Fan Yang, your technical analyst here at CMS Forex. Remember to check out fxtimes.com regularly for your latest news and analysis, as well as educational live events. There won't be any video updates tomorrow, but there will be one on Friday. Bye for now, and happy Thanksgiving to those that observe the holiday.